In this video, I'm going to explain what is paper hands versus diamond hands in crypto. Let's say you have two friends, Tom and Tony. Both of them invested in the crypto market, but they have two completely different approaches. Tom held on to his investment no matter what happened, even when it performed badly. On the other hand, Tony bought and sold new tokens very frequently. He would sell his investments at the first sign of trouble, hoping to avoid loss. These two friends represent paper hands versus diamond hands. These are slang terms used to describe investors' behavior towards holding or selling their investments, especially during volatile market conditions. But why does this matter, and how does it affect your investment strategy? That's exactly what we're here to explore. Welcome to Crypto Finally Explained, the most crypto-friendly educational YouTube channel for actually learning crypto. Here, I finally explain crypto topics using simple animations, visual doodles, and real-life examples, so no matter if you're 5 or 75, you'll be able to understand them. In this video, I will explain to you the concepts of paper hands and diamond hands, the reason behind these two behaviors, and the best time to adopt each approach. Before we begin, a quick disclaimer. In this video, I'm not trying to give you any sort of investment or financial advice. My goal is to explain these terms to you in the simplest way possible, so you can navigate and learn about crypto investing more confidently. Okay, now that that's clear, let's get to it. To start off, let's go over the diamond hands definition in investing. Think of diamond hands as those tough investors who don't flinch or run away when investment prices start to drop. They're like the superheroes of the investment world, not scared of a little bit of market shaking. There are 3 characteristics that define diamond hand investors. They're not scared of risks, they really believe in what they're investing in, and they're in it for the long haul, not just quick wins. They see the ups and downs of the market as just part of the adventure of investing. They're called diamond hands because, just like real diamonds, they don't crack under pressure. They keep their cool, holding on to their investments because they believe those investments will grow in value over time. One of the biggest benefits for diamond hand investors is seeing their patience pay off when the market recovers, which it usually does over time. Think about the early days of the internet when a lot of people didn't believe in online businesses. Those who held on to their investments in companies like Amazon saw massive rewards. But being a diamond hands investor can also have its downsides. Being too emotionally attached or overly optimistic about an investment can blind you to the real risks. It's like being on a ship that's sinking because of a huge hole on the side, but you stay on board because you love the ship too much. It might sound noble, but it's not the smartest move if you end up going down with the ship. Now that we understand the meaning of diamond hands, let's explore the paper hands definition. Imagine holding your investments not with the strength of diamonds, but with the fragility of paper, ready to let go at the slightest sign of market trouble. This is what being a paper hands means. Paper hand investors are quick to jump ship, selling their assets at the first hint of market change, whether it be positive or negative. They watch the market's every move to catch the earliest signs of potential profit or loss. This approach is very common among crypto traders. Their motive for investing is often based on the short-term valuation of the asset. So, typically, they don't pay too much attention to the intrinsic elements of the asset, like the project's vision, potential real-life usage, or the people behind it. To put it simply, if they think something will go up in value, they buy it fast. And if they see it starting to lose value, they sell it quickly too. But what's going on in the minds of paper hand investors? A lot of it boils down to not wanting to lose money. When the market dips, the fear of watching their hard-earned cash disappear is too much to bear, so they decide to sell and cut their losses, hoping to sleep a little easier at night. Now, having paper hands comes with its own set of upsides and downsides. On the downside, selling off assets too quickly can mean missing out on the market's eventual rebound, where prices go back up, and those who held on enjoy their gains. But there's a silver lining. Paper hands can sometimes save investors from deeper losses. If the market continues to fall, selling early might mean avoiding a bigger financial hit. This strategy can be a double-edged sword, offering a safety net during uncertain times, but also risking the chance to be part of a recovery that could multiply your investments. Before we continue, let me remind you that I make videos covering a vast array of different crypto topics on my channel. So, if you want to learn more about crypto or Web3 technology in general, be sure to subscribe so you won't miss a video from me. Okay, let's get back to it. At this point, I'm sure you understand that investing in crypto is like sailing on an open sea. It can be very unpredictable at times. Sometimes, the waters are calm and the sailing is smooth, but other times, storms hit and the sea becomes rough. This stormy sea is what investors call market volatility, a time when the prices of cryptocurrencies go up and down like waves in a storm. It's during these turbulent times that we see who has diamond hands and who has paper hands. If you're the type to hold tight to the mast, believing the storm will pass, you've got diamond hands. But if you're quick to jump into a lifeboat at the first sign of a wave, that's more like paper hands. The way investors react to these stormy markets can tell us a lot about how paper hands and diamond hands navigate their investment strategies. But what causes these storms in the first place? A lot of it comes from things happening around the world. It could be big news about the economy, like when a country's economy is doing really well or facing trouble. Sometimes it's global events that shake people up, like political changes or natural disasters. Even new rules about trading or investing can make the waters choppy. Let's look at some real-life examples to see how this plays out. Remember when Bitcoin hit its, at the time, highest price and then dropped dramatically in 2021? The diamond hands were the ones who held on to their Bitcoin, believing it would rise again, while the paper hands sold theirs, afraid of losing even more. Or think about the stock market in 2008 during the financial crisis. It was a real test of who could hold on through the storm and who couldn't stand the waves. So when it comes to paper hands versus diamond hands, should you commit to one method? Most crypto veterans would say the answer is no. While it is likely that you lean on one side, I think it is possible to adopt either one in different situations. Let's take a look at the best time to be a paper hands versus diamond hands. Being diamond hands shines brightest when you're in it for the long haul, especially if you're invested in something you truly believe in. It's not about clinging to every token or coin you have during every market shakeup. It's about knowing what's worth holding on to for the journey ahead. So, how do you build this unshakable confidence in your investments? It starts with homework, lots of it. Before putting your money into anything, DYOR, do your own research. Understand what you're investing in, why it has potential, and how it fits into the bigger picture of the market and the world. This solid foundation gives you the strength to hold on when things get shaky. Next up, don't put all of your eggs into one basket. Diversification is your safety net. By spreading your investments across different types of assets, you protect yourself from falling hard if one of them dips. It's like having multiple anchors in a storm. If one loosens, you've got others holding you steady. Setting clear goals is also crucial. Ask yourself, what am I investing for? Is it retirement, buying a home, or something else long term? These goals remind you why you're enduring the market's roller coaster in the first place. Emotional control is the captain of your ship. The market will test you with its highs and lows, but staying calm and avoiding knee-jerk reactions to every news headline helps you stay on the course. Remember, it's the long-term trends, not the daily fluctuations that matter the most. Lastly, arm yourself with tools and allies. Financial advisors can offer personalized advice, while investment communities provide support and insights from fellow investors. And never stop learning. Books, courses, and articles are your treasure maps, guiding you to make informed decisions. In some scenarios, choosing to be a paper hands investor is the smart move. Let's dive into when it might be wise to release your investments, similar to letting a balloon float away because you know it's time to let go. Imagine you're holding on to a crypto investment that's been going downhill fast, much like a roller coaster that only seems to go down. If there are clear signs that the crypto market or a specific coin won't bounce back soon, or if you suddenly find yourself needing cash for an unexpected bill or a big life event, then selling your crypto, taking the paper hands approach, might just be the right move. Being smart about when to fold means having a good sense of timing. It's not about selling in a panic, it's about selling with a plan. Setting stop-loss orders can be a smart move. Think of it as setting a safety net for your investment. If the value drops to a certain point, you automatically sell to avoid deeper losses. It's a protective step to keep a bad situation from getting worse. It's also key to keep a close watch on your crypto investments and the broader market trends. Being flexible and ready to adjust your strategy based on new information keeps you one step ahead. The crypto world is fast-paced, and the strategies that worked yesterday might not hold up today. In short, it's all about knowing the right approach to use for different scenarios. If you want to know more about the best methods for your investments, check out my video discussing 6 rewarding strategies in crypto investment. There you go! We've covered what is paper hands and diamond hands in crypto and how they differ from each other. The main takeaway from this video is that both paper hands and diamond hands methods can be useful strategies as long as you know when to use them. Even though naturally you're more likely to lean towards one behavior, it is worth considering that understanding both approaches can give you more benefits. So, which one describes you more? Are you a paper hands, a diamond hands, or perhaps a little bit of both? Let me know in the comment section below and let's have a conversation. Anyways, thank you for watching. I do hope that you've learned a lot, and I hope to see you in my next video. Cheers!